Let me grab my screen, ladies and gents. I did start a webinar recently and forgot to share my screen, which was kind of hilarious. So we're not going to do that today. We're going to start sharing screens to make sure we're going to get this correct, which I think we are good to rock and roll. Now, I'm going to jump on the chat for everybody, guys, to make sure that you can chat to each other. Ultimately, you can see where everybody's at, where are they hiding in the world. It's always good fun. Now, our record in this webinar as we get started is 11 countries. So I would love to do, as a function of a bit of a sound check, also a technical check, make sure you can see what I can see. You should, in a perfect world, be able to see a slide. We've got Australia. First cab off the rank is Australia. We've got Australia. Oh, it might be all Australian tonight. Oh, we've got Western Australia. They're different to everybody else, of course. They're different to everybody else. Now, in saying that, guys, so hello. I hope you guys are absolutely well. We got Germany. Here we go. It's on. So at the moment, I'm not being rude, but Europe is losing 4-1. Tasmania, now that's a different country altogether. Netherlands. Very good. Philippines. Here we go. All right, Greece. There we go. Suzanne, Queensland. G'day, Bo. How are you? WA. Look, absolutely brilliant. So, like, we're all over the world, guys. We're all over the world. A global webinar. I do think it's a really exciting. Again, I think it's just a really exciting place to be. Now, tonight we're doing webinar number 7. I was like, I can't believe it was webinar number 1 was on Anzac Day. And I know that's a long way ago now, but guys, we're going to be doing webinar 7. Ronaldo, you're from Lebanon. Okay, so we are going very, very quickly, guys. So I know we've got Singapore in tonight, we've got Malaysia in tonight, we've got the US in tonight, we've got Australia, we've got Lebanon, we've got Germany, we've got Greece, we've got the Philippines, I've got the Netherlands, and Luca, of course, Italy. So Luca is in the Netherlands representing Italy. So, guys, I think we're climbing, which is really exciting. Now, in saying that, guys and girls, I want to do one of the first advanced webinars with you tonight. Now, a couple of assumptions about the advanced webinars. Luca, I've got a pretty good memory. One of the things that I do want to highlight tonight, guys, we're going to go a little bit advanced. So we're going to start, as I say, in the Army, we used to say, we're going to start down in the weeds, and then we're going to basically lift up and have a look down at the world. Now, if you're going to trade very, very well on a commodity or an index, gold, oil, crypto, whatever it is that you're trading, guys, you tend to find it's really, really good to have a small chart as your primary execution chart. So tonight we're going to be looking at a 5-minute chart because it's really, really good for futures trading, So we're going to have a look at a 5-minute chart. But ultimately, what we're also going to be doing is we're going to be looking at a 15-minute chart and a 60-minute chart. We can also look, as if you wanted, a 30-minute chart. Now, ideally, in the world of trading, as if we're trading down in the weeds, so if we're fighting the fight in the weeds, your 15-minute chart, your 30, and your 60, guys, generally that's like literally flying a drone above the battlefield and getting a slightly more macro perspective on what's going on. It does actually end up being as a really, really powerful tool when you know how to use those correctly. Now, this in itself is actually quite a complex subject. As in next week, guys, we're going to be talking about the dare I say it, one of the most exciting yet one of the most difficult topics, guys, in the game of trading, which is trading psychology. Now, why would I mention next week, guys, trading psychology, when this week we're talking about smaller chart, larger chart combination trading? Now, the reason we want to specialize as in smaller, larger chart combination trading is because even if we're running at a 90% success rate, guys, which we've done again in the LTR, in fact, live trading room today, guys, we ran at 100% strike rate. So that's not abnormal. It's not abnormal to sit in the well over 90% success rate. For those that might be new in the webinar, today, we run a live trading room every day on the European Open, guys, targeting the NASDAQ, the S&P 500, and the German FTAX. It's a really, really great little session to trade. Now, in saying that, if you can run at a 90% strike rate on your trading, you are going to start to develop a really, really good psychology around the art of trading. Now, if you can combine smaller charts and larger charts together, what you'll actually do is when the market actually offers you an opportunity for a far larger strike rate, far larger target, I should say, then you can actually try and sit on your 90% plus strike rate, but you're actually going for a target that's 2 or 3 or 4 or 5 times as what you would normally do. So that's all about Jeroen, have I got that correct, Jeroen? What is the CRV with a 90% win rate? So you mean, what is your risk to reward ratio? So whenever we get into a trade, typically the risk to reward ratio is going to be 1-to-1, or we're going to target 1-to-1. Now, when people first start trading, our risk to reward is normally less than 1-to-1, because we're looking at getting people in and out of the market quite quickly, getting around about $100 to $200 US in the bank and saying, all right, boom, you're finished for the day. In time, Jerome, what we do is we use a smaller target and a larger target and an automated risk control. So we're still using advantage of that small target that gets paid quite quickly. But what we're also doing is we're using a larger target. So when the market wants to run in our favor, we can actually skew the risk to reward ratio significantly in our favor. In fact, there is a really brilliant trade. There's a really brilliant trade on the NASDAQ from today. As I actually just put out a YouTube video. I just put out a YouTube video on this one here. This is our, this is our, guys, this is obviously a live NASDAQ chart from today. All right, so this is what we did in the live trading room. We've basically gone short, then we picked up a long, then we picked up a short, then we picked up a short, then we picked up a short. So again, we had 6 little opportunities today, which was good fun. The flip side is my trade of the day. As I just put out a trade of the day video, guys, I do a little like 60-second video every day. And I said, you know what, this is my trade of the day. Guys, that's on the DOURO Day Trading YouTube channel. You can jump on it. There's about 90 shorts on there already. 90 shorts on there already. We picked this 90% failure, guys. And I said, this was my trade of the day because ironically, as you've just, Jerome, as you've just picked up, the risk to reward ratio on this one was incredible, as in incredibly brilliant in our favor. Now, this is, guys, this is actually a really, really good, again, the question was raised. This is a live NASDAQ chart. Have a look at how far they've gone. As they've actually run the market down beautifully from this trade. So today, guys, the market was really, really congested because the NASDAQ was bumping off the all-time high. Okay, now we're starting to get a little bit of a sell down, a little bit of attitude coming back into the market. Therefore, guys, we're going to get some really good trades in the session. So for those that are new in the webinar, if I see a trade setting up, we'll actually go and talk about that trade, guys, effectively in agreement with what we're doing in the session tonight. Let me just throw that one back down the other way. So what we want to do, guys, talk about the drone over the battlefield. Okay, when you're on a 5-minute chart as a futures trader, or you might be on a 5-minute chart, guys, as a Forex trader, a crypto, 5-minute chart, probably a little bit small. You might need a 15-minute chart or a 30-minute chart. But guys, what we're doing is we're getting our primary execution chart, the chart that we're entering all our trades on, and then we're taking a slightly more macro perspective. So if we get an opportunity to go for a far larger target, then we get to go for a big target with very small risk and also a very tight automated risk control. So we can get to the point as where the risk to reward ratio is maybe 30 or 40 times in our favor. And probably one of the best ways to do that is to show you an example from tonight where you could have actually done exactly that. So what I'll do is I'll show you your exact entry, your exact stop loss, your exact trailing stop, and basically how to project a target down the screen. And one of my favorite projections is the Fibonacci extension. And to check if anyone has done any homework, has anyone done any homework? Can anybody tell me what is the favorite Fibonacci extension number on the NASDAQ for the NASDAQ traders? Terry, well done, 133 Fib extension. Well, look at you guys. Even Luca's like, it's the 133, Lockie, it's old news. Now, funny, Luca, I wonder if the NASDAQ turned on the 133 Fib extension again today. Now, I asked that question, guys. I asked that question. I'm throwing the challenge out. Like, I'm literally, I want the market to prove that I'm wrong. Now, because you probably go, well, Lockie, why would you want to do that? I want to do that because in the art of trading, there is really only mathematics and numbers. Well, now, again, if you've been to the previous webinars, there's mathematics, there's numbers, there's some ratios, and there's some good little signal sets. But all of this, guys, and one of the reasons I do love Fibonacci, guys, and I love mathematics is it doesn't matter where you are in the world, because you could be in Italy, what have we got tonight? Singapore, Hong Kong, Australia, it doesn't matter. 1 + 1 = 2. It doesn't matter where you go in the world. So if you get really, really good at reading, guys, reading the power of the markets, guys, using those ratio little tips I was giving you in the previous webinars, you can actually navigate the markets really responsibly, targeting a very high success rate. So if we can do all that tonight, as I said, I do that in under 60 minutes. We're doing pretty well. Guys, so part 7, okay, part 7, we're doing the advanced, guys. We've got 3 advanced webinars coming. Tonight is the first, as it's basically an introduction to multi-chart trading. This is quite, guys, this is quite a, quite a complex subject. Now, in saying that, when running the live trading room every day, it takes around a 30-minute brief as we lead into the live trading room every day, looking at that macro larger chart perspective in order to work out how we're going to navigate through those larger charts on the smaller charts. So it is quite, guys, it is quite an advanced subject. In saying that, I'm going to try and boil it down to sort of little bite-sized chunks. So regardless of the amount of trading you may or may not have done, you can walk away from the webinar having learned something tonight, which I think is brilliant, absolutely brilliant. Now, speaking of that, guys, my target for tonight, if I can be a little bit military on you, my target is I want to basically achieve all of these things. Those smaller charts are brilliant for trade entry and risk control. So the small charts, the 5-minute chart or the 15-minute chart, guys, absolutely brilliant for trade entry and risk control. The larger charts are brilliant for predicting larger target trades. We had a killer, guys, a killer example of that last night. I'm not kidding. I can even show you that as well. So we'll holy moly. For those that were in the live trading room last night, I was literally, the live trading room, so it runs for 90 minutes. Normally on the hour, so for me in Tokyo, well, I'm in Japan, guys. I say Tokyo time because if I tell you where I am, people would just, again, try and work out time zones. So it's Tokyo time. So the European Open starts at 4 o'clock in the afternoon, as in finishes at 5:30 Tokyo time for me. At 5 o'clock yesterday afternoon in the live trading room, I said, we are picking up the most magic reversal on the 60-minute chart. If we get a nice little buy signal, I want you to hold that for up to 3 hours. Now, if you know what happened last night, as the NASDAQ turned around and went through and spiked through its all-time high. So that being said, bloody absolutely incredible. First time in the session, what's the cost to join the live sessions? Jerome, they're on the DOURO Day Trading website. It's $97 a month. Now you're probably going, what, 97 bucks? If we can get one trade on the NASDAQ for $100, so the goal is to get at least $100 every day. So people are actually paying for their live trading room on day one, and then they just kill it. They just kill it. I'll show you. Well, why don't I, mate, to put that in context, why don't I show you what we did today? And you'll probably be a little bit chuffed, actually. And well done, guys. Lee has just put a comment in the webinar. Now, well done to Lee, guys, because Lee, I believe your daily goal is 20 ticks, and today, is it correct? You did 200 ticks. Yeah, well, there you go. So you've done 200 ticks today. That's $1,000. So you've paid for your live trading room for 10 months plus some loose change. And Jerome, look, it's a really good question you ask. So people ask, well, Lockie, why don't you charge more for the live trading room? Let me answer that question. So DOURO, as a trading company, we also run a private prop desk. Okay, so what we do is we basically, in principle, we're a trading school just on the first layer, like literally layer 1, we're a trading school. If we have a trader that shows significant talent, what we do is we say to that trader, for example, just what Lee's done, we say to Lee, would you like us to pay you to show up to the live trading room every day? And we are going to pay you as a fully funded professional trader. So yes, we are a trading school, but we are a trading school with a far bigger intent. We don't just teach people trading. I'm personally funded at one of the bigger accounts that you can get around the world. That went quite well today. So long story short, mate, we might be a trading school, like on the surface, we're a trading school, but if you literally peel one layer of the onion away, we're building a prop trading team in Malaysia, building a prop trading team in Singapore, and we've also got private traders all over the world who are starting to show significant promise, and they'll all get the opportunity at some point in time to come and actually trade for us if they choose. Don't have to, they can do what they're doing. So quite good fun. Now, guys, point number 3, the key to the trade entry is early trade identification with acceptable risk. Okay, point number 4, the key to target forecasting is Fibonacci retracements and extensions. And that's where we talk about each of these markets around the world. Guys, like the NASDAQ, the magic number is the 133 Fib extension. The backup to that is the 141.4. So that's a little learning, guys, a little learning for everybody. There's a whole lot of opinions out there on Fibonacci. We have Fibonacci numbers specific to the markets that we trade for each of the trading sessions that we trade. Okay, so we love the 133, 141.4 Fib combination as for the European Open. And I can show you a couple of examples of that today and show you how to use that. So you'll probably go, wow, the market actually turned it exactly where it's meant to. So we get back to this premise that everything in the game of trading is mathematics, and that's really exciting because it doesn't matter where you are in the world, doesn't matter what language you speak. Generally speaking, when I checked last time, 1 + 1 = 2, and that means we can all do this and we all can be really good at it, which is really exciting. Now, in saying that, guys, because we are across multiple jurisdictions, obviously Australia is super sensitive to compliance. So is the UK, guys. So is Singapore to a degree. I've got to go through a couple of what we call in Australia CCNs, or customer caution notices. Now, I do have to mention that trading futures and CFDs, for the CFD traders that are with us tonight, does involve risk. Now, ultimately, there are two risks in trading. There's a risk of making money and a risk of losing money. So therefore, ultimately, we are 100% professional risk controllers. Okay, that's all we are. 100% professional risk controllers, and I'll show you how to do that tonight. Now, guys, because we are trading futures and CFDs, we do effectively borrow money every time we take a trade. That's called margin. What does that mean? We can make a lot of money really fast. We can also lose it really fast. So once again, we are professional risk controllers. And the question, guys, from before, from DOURO, about risk to reward ratio is very important. So I'll show you on a trade that we called in the live trading room tonight, how you could have controlled your risk as a beginner trader, literally as a beginner trader, how to control your risk as a slightly more advanced trader. And we rock and roll from there. Perfect, Jerome. Sounds fantastic. Now, that said, guys, everything we're going to be talking about tonight is general information only, and the past performance of all the financial products now in the world, I was going to say Australia, but now right around the world, can't be used as a, I'm looking down at the right-hand side, guys, the German market's starting to fall. So past performance, guys, can't be used as a guide for future performance. And we used to be able to, but the rules have obviously changed. Now, my history, guys, real quick. I'm the CTO, or Chief Trading Officer at DOURO. Guys, I come from a military background. Long story short, I've been doing this for a long time. I'm fascinated by the art of trading. So I think it's a little bit more than just a candlestick thing. As you get to the point where if you're really, really passionate about something, as I am, I'm passionate about the game of trading. I'm passionate about the art of trading. And I'm passionate, guys, about empowering people to understand the same. Now, some of you have been in trading for a long time. Some of you haven't been in trading for very long, but either way, there's a lot of misinformation out there on the internet. There's a lot of crap on the internet. Guys, I've written books on it. I've co-authored an international bestseller. I've had people ask me to take my book off the internet because it exposes the Forex trading business model, which is basically rape and pillage, not to be rude. And guys, it's been an interesting journey. Now, the key milestones, a number of really, really key milestones are listed on this slide for you here. Effectively, I was a Forex trader. I discovered futures trading in 2007. The moment I discovered futures trading, I turned off my Forex and CFD accounts the next day. We won't get into that tonight, but suffice to say, holy moly, I discovered futures. Now, in saying that, guys, I launched my first trading school in 2009. So long story short, I learned from an American company. They weren't doing a very good job. So I basically bought the trading school. So I literally bought the trading school, or the license for the school in Australia, and said, you know what, I think we can do much better. In February 2010, we launched a new education. In mid-2010, launched the indicators to actually complement that education. 2011, guys, got picked up to speak internationally, had the opportunity to speak in 22 countries. I actually ended up growing that company to be the largest futures day trading school in Southeast Asia. Guys, mid-2013, I worked with Donald Trump. Some people don't like him. Some people do like him. He's actually quite a nice person. Again, when he's not being charged with 34 accounts of the same offense, we won't get into that. He's actually quite a nice guy. Guys, end of 2023, I actually got the most incredible opportunity. The guys, after 10 years of running my company in Australia, had a good opportunity to actually sell my company and take a break. It's lasted 2 days on a break. I got a phone call from DOURO over in Singapore, basically said, my gosh, Lockie, I cannot believe that the #1 trader of the biggest education school in Asia has decided to take a break. I said, yeah, I'm just going to chill out for a while. And they said, well, we want to build a prop team around you. I was like, okay, I'm interested. And here we are. So guys, end of 2013, moved to Japan to work with DOURO out of Singapore. For those that don't know, my wife is children. My wife is Japanese. My children are half Japanese, half Australian. That makes them Japaralian. And we live a very gifted life. We live a very gifted life. We are in Japan. We love the food. We love the onsens. And You know, I say to anyone out there that if you're thinking about becoming a professional day trader, guys, get really good at trading, start coaching. You can travel all over the world because there's people everywhere that want to know what we do. And I think that's very, very exciting. So guys, when we do multi-chart trading, what we're going to do is we're going to use the live trading room session from tonight. Now, for those of you that have been to my previous webinars, you know that I present off live charts, right? I don't present off a dead chart. Anyone can go back to 4 or 5 days ago and find a really good signal. We're going to focus on tonight, make sure we can pick up a good signal and we can basically take advantage of that. Now, the target signal set, guys, is beginner to intermediate tonight. The theory is going to be a little bit advanced, but I'll try and chunk it down as best as I can. The target learning, guys, the target learning is ultimately, why did we take this trade? So I want you to be able to leave the webinar tonight being able to say, you know what, not only did I learn how to take a trade, but I understand why I took it. Okay, because if you can understand the mechanics of the market and why you took a certain trade, you can replicate that day after day after day. And very, very quickly, you're going to become a big fan of what we do. And we'll do a quick review of the live trading room trades if we've got a little bit of time. Now, very quick history, guys, very quick history. When I started trading, I was taught what we call NHD, or negative histogram divergence. Basically, in principle, that means picking a divergence point in the market, guys, that leads to a series of 3 trades. Now, these trades we've done in our preceding webinars, namely reversal, buy, switch, and continuation. As if you want those recorded webinars, they're on the Trading Pit, guys. They're on the Trading Pit YouTube channel. Please go and have a play with those. They're there, guys, ready to rock and roll. And we've got a lot of really, really good feedback on those webinars so far. Now, guys, the first point there, multi-chart trading, what I call MCT, guys, includes the 15-minute chart, the 60-minute chart, the 240 and the 1440-minute charts. Now, I've put a little comment, guys, at the end there because again, being a little bit of a mathematician, I was being really accurate with this game of mathematics. There's a lot of traders out there in the world that will say, Lockie, I use a daily chart. Now, just be aware that a daily chart can be a little bit inaccurate when compared to a 1440-minute chart. So if you want to be super accurate in the game of trading and you want to pick up some really, really awesome trades, guys, what I'd suggest you do is use the 1440-minute chart, not the daily chart. Okay, now some people would say, Lockie, they're almost the same. On some days, they're almost the same. On some days, they're vastly different. So just be a little bit careful of that. Okay, now point number 2, guys, your larger charts are referred to as your reference charts. Okay, now the best reference charts are 2 steps up from your execution chart. So what does that mean? As a guide, I'm a 5-minute chart trader. What does that mean? My best reference charts are the 15 and the 60-minute chart. Now, guys, there's a little one sitting right in the middle there called the 30-minute chart. Ultimately, if you can't get clear guidance from the 15, you drop to the 30. If you can't get clear guidance from the 30, you drop to the 60. If you can't get clear guidance, if you're a 5-minute chart trader and you can't get clear guidance from the 15, the 30, or the 60, then take the night off. Guys, it means the market is channeling, it's not going anywhere. You've got an opportunity to get a night off. Now, the flip side being, guys, if there's Forex traders in the room today and they say, Lockie, my primary execution chart is the 4-hour chart. Okay, so I use what we call the 240-minute chart. Then if you wanted your best reference charts, guys, you would also step 2 or 3 charts above. So guys, that would be for a 240-minute chart trader, your best reference chart will be the daily chart and the weekly chart and ultimately the monthly chart. But what we are doing though, guys, is we're starting to get into, if you're executing on the 4-hour chart with a daily and a weekly perspective, you're starting to get into trades that not only take a significant amount of time, but you've also got to trade over high impact news announcements that can throw the market all over the place and ultimately blow up your trade. So what do I mean by that? There's a lot of people out there in the world, there's a lot of people out there in the world that will basically trade a 4-hour chart with a reference to a daily and a weekly. Guys, we are, without being rude, we are far more accurate than that. So we execute on a 5-minute chart with the references of 15, 30, and 60 because, as our average time in trade is 7 to 15 minutes. So we're in and out of the market and we're done. If you're a long range target trader, your average time in trade is around about 27 minutes. So you can see that we're not holding trades for 3, 4, 5, 6 days, guys. We're holding trades for 3 or 4, 5, 6 minutes, and that's why. John, great question. What is the difference between the 1440 chart? So the 1440-minute chart is effectively every single minute of the day. If you have a look at that, adds up to 1440. Okay, so very, very accurate, larger chart. If you use a daily chart, then some of the data providers will turn your data off 15 minutes after the close, 30 minutes after the close, 45 minutes, some are 60 minutes. Some have a gap like the FDAX. The gap on the FDAX is 4 to 5 hours and they turn the data back on again. So you find that the 1440-minute chart is more accurate because the data is more accurate. So again, if you want to be really, really accurate with your trading, then if you had the choice of daily versus 1440-minute chart, use a 1440-minute chart. Great question. Now, guys, the third point down there, multi-chart trading applies equally to the 5-minute charts as it does to larger charts like the 4-hour and the daily. Guys, particularly if you're a futures trader. Guys, interesting point that everything we're doing tonight, guys, applies equally to Forex, CFDs, options, stocks, and crypto. As though you guys, but if you've been following these webinars, guys, you'll know that I'm a fan of crypto. You know that. What I'm actually doing is I'm actually using my futures trading larger chart strategies, guys, larger chart strategies, so future larger chart on crypto. Now, I'll give you an example, guys. I'll give you the example. So these are the cryptos I'm currently in. So I'm in Pepe, GameStop, Miro, Casper, XRP, and Brett. Guys, just as an example, Brett has done 28% return today. Now, interesting point. Last week, guys, we did an MDI or a trend continuation trade. Guess what Brett set up earlier today before then going up 28%? A trend continuation trade. Now, I won't go, guys. I won't go through the rest of that. Suffice to say, just as a point positive, last week we did MDI continuation trades. Today on the 60-minute chart, the Brett cryptocurrency set up exactly the trade we were talking about last week, and it's gone up around about now 27.92%. So you can grab what we're doing, guys, and apply it to different things. May I suggest, though, when you start your trading career, you want to keep it as simple as you possibly can. Master one art. In our case, that's futures trading. So we want to master one art, and then eventually we want to start pulling money out of futures and diversifying that into other asset classes. Now, I'm actually producing, guys, a course at the moment, the 102 course on larger chart trading, which I will actually combine futures and crypto together, just so you know. Now, all I'm talking about, guys, we're talking about let the market do the heavy lifting. Okay, that's all we're doing. Let the market do the heavy lifting. Now, the reason we're ultimately doing that is we're basically saying to the market, you generate the signal, and when you generate the signal, I'll take it. Okay, so what does it ultimately mean? Psychologically, if the market makes a mistake, it's the market's fault. What does that mean? We've depersonalized our trading. We've got the human factor out of it, and we're basically saying, I'm only taking a trade when the market actually gives me a bulletproof trade, as the NASDAQ did 5 or 6 times tonight. Okay, we can talk about that as we need to. Now, as a little bit of a revision, guys, for those people that have not been, in these sessions, we'll just basically build off what we've covered over the last 6 weeks. We want to talk about the ABC principle, guys, because it equally applies to smaller charts and larger charts, particularly when we're doing MCT or multi-chart trading. Now, this stair step, guys, that is referred to, as for those that haven't been in the previous webinars, that's actually referred to as an ABC pattern. Now, the interesting thing about the ABC pattern, okay, once the buyers have closed over the breach point, we say the buyers own the stair step in the market. We also say that the buyers have completed 2 steps. And what we're actually doing is we're anticipating a 3rd step in the market. Now, for those that missed that webinar, guys, you normally get 2 steps in a stumble or 3 steps in a stumble. Tonight on the NASDAQ, for example, we've got 2 steps. We've got a stumble, an absolutely stunning reversal signal, and it's turned around and shot back the other way. So now, mind you, let me show you that. Let me show you that. Okay, so just so we know what's going on. This is our reversal we were talking about earlier. Okay, so you note, guys, we talk about 2 steps. Okay, sellers have sold the market down. Buyers have pushed the market up. Sellers have sold the market down. Now, while we're here, guys, you know how we said, look at the magic number of the 133 fib extension. Let's see if the NASDAQ is playing the game today. All right, so we sell down to the low point. Okay, we sell back to the high point. And what we're looking for is a failure at the 133 fib extension. Now, some of you may not have been to these webinars before, but have a look at that right there and tell me where it failed. Can you see there? Absolutely. Yeah, that's easy to make it bigger. All right, absolutely. Now, the flip side, we'll go full screen, guys. Now, mind you, I get carried away doing this and we basically run out of time. But you can see here I've followed the beautiful stair step, guys, in the market. We've drawn our Fibonacci extension over that stair step. And guys, have a look at where the market failed. Now, when I asked the question before, what is the magic number? Guys, what is the magic number on the NASDAQ? Everyone that's been to the previous webinar said, oh, it's the 133. And I said, absolutely correct. And sometimes it's backed up by the 141.4, which is sitting just below it. Guys, but have a look at the most incredible reversal signal that's occurred right there. We'll come back and talk about that. And what I would love to ask, right, for those people that have been in my sessions before, when does the market normally turn? When does the market normally turn? Now, for those, Suzanne, wow, very fast from the Gold Coast. Guys, it normally turns on the hour. Okay, now you guys are, Luca, Italy, turns on the hour. So, interesting point. Let's have a look at when the market turned. So that reversal signal, was at 6:55 p.m. local time. When does the market normally turn? On the hour. So you've got a reversal signal here, guys, 5 minutes to the hour. All you do is wait for the hour to close, wait for the sellers to push down, put your order over the top of that candle and send it up. That's all you had to do. Now, interesting. I wonder if everything we're doing tonight directly correlates to everything that we've done in all the previous webinars. Oh, that's so Mark, great question. So Mark say, actually, Lockie, my Fibonacci only goes to the 100. How do I make it a little bit bigger? But what you need to do is you actually need to go into the Fibonacci extension. Okay, you need to actually go into the Fibonacci extension. So this is a separate Fibonacci webinar, but more than happy to answer. Mate, come down here to your levels. Okay. And what you want to do is you want to, like, for example, I've got the 133. Okay, the 133, and then the 141.4. So you basically type in the number over here, and then you push add down here. And what it's going to do is it's going to add your Fibonacci to the list and add. And then what you want to do is push OK down here. And then please save it as a template. Now, mind you, if it would help out, what I'll do is I'll actually put a video on YouTube on the DOURO Day Trading channel on how to build a Fibonacci extension. I'm pretty confident there's one already there, but mate, I can do a new video for you, how to build an extension, how to add the levels in, how to color it correctly, and we can rock and roll from there if you want. It's 20 minutes work, mate, to do it, because I've been using this Fibonacci extension for a very long time. Okay, now interesting point. As the NASDAQ has cruised down, it's failed at the 133, 141.4. The NASDAQ has turned on the hour, produced an absolutely incredible reversal bar, and then gone to at least $200 US in your favor. Guys, with less than $200 at risk. Anyway, we'll come back. Well, guys, we'll come back to the live chat in a second, because I built these amazing slides. I want to make sure you get to see all of them, and we are chewing our time quickly. Right, so in the game of trading, doesn't matter what size chart you're using, that's called buyer step 1, that's buyer step 2. The sellers cruise back in, the buyers come back in again. We call that the D leg and the E leg. Once again, you've got a seller failure point. Also, you've got another breach point, okay, which is up the top there, that black line. All of these points, guys, all of these points are what you establish to say, have the buyers in this case moved 3 phases or 3 steps in my favor? Because if they do, typically what now occurs is the market actually sets up a really, really lovely reversal. Now, the flip side of the reversal, guys, that's where we get the name 2 steps in a stumble or 3 steps in a stumble. Now, the beauty of that, if the market moves in 3 phases, which it typically does, guys, not only do you know when to not get into the market right at the end of the 3rd phase, but you can also get ready for a really, really lovely reversal that normally reverses all 3 of the steps, or it normally reverses all 3 of the steps. And to put those buying steps into context, I'll put a red little arrow on the left-hand side. That is basically my downtrend. So what we're doing, guys, on our larger charts, we've got our downtrend over there on the left-hand side. On larger charts, we are looking for a market stall point very early in leg A. Okay, now let me grab a live chart and show you. Okay, so we're looking for, let me show you, I'll build the slide and then I'll show you what I mean. As on larger charts, we then look for a seller failure point to offer a tier 2 reversal. So this first red circle I've added on the chart, guys, is basically the first time the market reverses. Then they'll come down and create another lower low, and then they basically take off. So effectively, we can pick up a really, really long range reversal right at the start of leg A. We can pick up an even more powerful won't go as far, but certainly more powerful and more predictable reversal at the bottom of leg B, because if the sellers have failed to push the market down, everybody's going to see that. Everybody's going to see that, and they're going to take advantage of it. Now, is there an example of that? Yes, there is. Okay, so work with me on this one. Guys, work with me on this one. Okay, how many phases does the market normally move in? Guys, I'm going to put my fingers up, and it's going to give you a hint. Okay, so if you haven't been to a webinar before, how many phases do we normally move in? Okay, well done, 3 phases. All right, so guys, tonight what the NASDAQ has done, that's buyer phase 1, okay? That's buyer phase 2, and that's buyer phase 3. Okay, literally 3 phases, 1, 2, 3. So what are we expecting them to do up here anyway? We're expecting them to fail and reverse. That's where we actually picked up our 90% Fibonacci failure, and it's brilliant. Okay, so that actually went quite well. Now the flip side, you can see, let me get rid of that. Oh, come on, quick. Where's my buttons? This one, I'll get rid of that one and that one. Okay, now we're now expecting, guys, 3 selling phases to the downside. Okay, or you might get 3 steps in the stumble or 2 steps. Now we know why we've picked up the stumble today, because of the 133 fib extension. Now what you've got, guys, what you've got on the PowerPoints before is this. So this is your first reversal point in the market. Okay, that's where you're going to pick up a really, really awesome reversal, but it's probably not going to go very far. Okay, have a look. It went that far. This over here, guys, the buyers have come back through, and this has actually set up a second tier reversal. Okay, so that's a second tier reversal, and have a look at how far it's ultimately gone. If you look at the size of the arrows, would everybody agree it's gone significantly further? So what I'm doing, guys, so on the slides at the moment, we're talking about stair-stepping the market up. In this case, we're stair-stepping the market down. But what that means, guys, what that means ultimately, now that is a live chart. Guys, I do this all the time. It's a live chart, so there is absolutely nowhere to hide. What we've got here, guys, what we've got here on the slide is exactly this. So the first time your team fails, it's going to set up a really good reversal. The second time, in this case, the sellers fail, it's going to set up a far longer range reversal, as we've just seen on the live NASDAQ chart. Now, interesting point is these stall points in the market, these little red circles, are normally very, very easy to find on the large charts if you understand how ratios work, right? So let me keep building through this slide. Guys, on larger charts, we now look for reversal, trend change, and trend continuation trades to forecast how far these trades are likely to go and how long the trades are likely to take. So what we do, guys, at the sort of the intermediate to advanced level is what I encourage you to do is this. I encourage you to use an early first target, like for example, on the NASDAQ, it's a 20-tick target, which is a $100 target. We then bring our stop loss through so we can't lose any money on the trade. And then we try and make as much money as we possibly can out of the trade. Now, if that means you take the first tier reversal, run it down, and then pick up the second tier reversal and run that as well, awesome. You're carrying no risk on the trade. So let's say you've made 20 ticks already and you've only got 10 ticks at risk on your second contract. It doesn't matter if you get stopped out on your second contract, you can't lose money. So the risk to reward ratio, let's say your stop loss is at $50 negative and your target's at $200 positive. The risk to reward is 4 times in your favor. The moment that second leg starts to develop, okay, you can then bring your stop loss into positive or bring your stop loss to -1, guys, just for giggles. Now, why do I say -1? If your stop loss is at -1, okay, so you can lose $5, and your target's at $500, your risk to reward ratio is actually 100 times in your favor. You got $5 at risk, guys, to make 500. So that's how we can be really, really smart, guys. So entry, early first target, cover your loss, can't lose any money. If you pick up a big win, guys, you pick up a really big win. And that, not only can you run, guys, not only can you do that and run at an over 90% strike rate, you can also skew, guys, you can skew the risk to reward ratio significantly in your favor on those longer range trades. Now, we endeavor, guys, we endeavor to do that every single day in the trading room. So I keep on saying, tight ATM on this one. First target here, let the profits run on the rest. And guys, it's going. It's what, again, from my side of the microphone, it looks like it's going pretty well. And Lee, you've got what, over $1,000 today of profit. That's brilliant. There's a couple of traders guys did near what Lee did today as well, which is really exciting. And so guys, that's all we do. That's all we do every single day. Now, as obviously exactly the same, as a bit of a revision, exactly the same applies to the sellers. Okay, so you've got your breach points, guys, you've got your failure points, everything just cruises down. As once again, as we've just seen on the live NASDAQ chart, you either get a 2-phase or a 3-phase move in the market. Lee, 2 days traded this week for $1,500 US. Well, that's over 2,000 Aussie. Got to be happy with that. Now, guys, as I build this for you, exactly the same principles apply. So seller step 1, 2, and 3. And ultimately what we're doing once again is we're using the larger charts, guys. We're using the larger charts to initially pick up the stall point in the market. So ultimately the primary role of multiple chart trading or multiple combination trading is to pick up the stall point in the market. So ideally you're going to pick the top of literally the top of seller step 1. And then, guys, if we cruise down, just like we've seen on the live chart, if we get a second tier reversal, that's the one that's actually going to be the big payer. Now, guys, I put over here, guys, a really, really, really important point. I'm going to start asking you questions. Now, it may be worth noting at this point that futures traders have only one data source. All right, so if you're trading the NASDAQ, for example, your only data source in the world, guys, is ultimately the CME. Now, what does that ultimately mean? CME, Chicago Mercantile Exchange. Now, if we've got one data source, guys, or some people would say one data point, if we have one data point, it means we've got one price. If we've got one price, what that ultimately means is all traders globally see exactly the same thing at exactly the same time. Terry, you nailed it. There's no such thing. There's no such thing, guys, in the game of futures trading as an OTC broker. They don't exist. I say when people say, well, Lockie, what's the difference between futures trading and Forex trading? I say, well, simple. As a futures trader, I can trade all the major currency pairs in the world if I want to, but I don't use a broker. As a Forex trader, you use a broker and you've got no choice. And the Forex traders go, but what does that mean? I said, well, that means your broker can trade against you. That's why I'm a futures trader. Now, guys, I spent a little bit of time, just so you know, I spent a little bit of time in a major bank, a major Australian bank in Sydney. And what fascinated me in that bank, like I'm talking fascinated me, is I walked into the bank and there were more than 240 traders, like 240 traders tapping away on the keyboard. Some are trading stocks, others are trading options. Do you know what? There wasn't a single trader, not a single trader on that bank trading floor out of 240 traders, not a single trader trading Forex. I was blown away. Like this is when I was young. I'm a little bit older now. And I was thinking to myself, isn't Forex all the rage? Like, isn't that like, oh my God, Forex, everyone's trading Forex. And the bank said, no, we don't trade Forex, mate, because we choose not to use brokers. Ding. Light bulb moment. I didn't know you could trade without brokers. Well, guess what? I found that out in August 2007 and shut my broker accounts instantly. Anyway, that's a completely different story. So, guys, some considerations before we go into the live charts. Okay, the best multi-chart combination trades need to consider the following. All right, now you must be careful with this one. The risk required for the smaller chart trade. So, if you see an absolutely amazing larger chart trade setting up, it doesn't mean you can take it. Because you've got to be very, very careful that the larger charts generally carry significant risk. So, what you need to do instead is say, you know what? Larger charts carry too much risk. What I'm going to do is I'm going to get the tip as to where these guys are going on the larger charts, but I'm going to execute on the smaller chart with acceptable risk. Well, that's John. You have just asked such a great question. Can't the banks manipulate the price for currency futures? No, John, they can't, because there's only one price point in the world for currency futures, and that's the Chicago Mercantile Exchange. So no, they can't. Now, you could ask another question, John. And the question is, Lockie, can banks manipulate the Forex market? Sure. Well, they control the price of the currency bouncing up and down for their clients, John, for their clients. But if you want to trade currency futures like the Euro-US cross pair, which its code is 6E, if you want to trade that through a futures exchange, there is no one on the other side of the currency pair to manipulate it against you, because the Chicago Mercantile Exchange is not allowed to trade. Full stop. Just not allowed to trade. So what does it mean, mate? You've got, so Johnny, if you don't mind me being so rude, you've got the global Forex market, of which the price is open to manipulation by whoever's giving you the price. And then you've got the global currency market controlled by the Chicago Mercantile Exchange, which is a futures market, which is completely separate to the Forex market and cannot be manipulated by anyone because it's too big. And even if it was tiny, there is no one on the other side of the market to manipulate it against you. So guess what that means, John? The vast majority of Forex traders that I was working with when I discovered futures have all switched to futures trading and have left their Forex brokers behind. May I suggest it was a very, very healthy day when we did that. Mind you, if there's Forex brokers in there tonight, they're going to be going, do not tell Lockie, do not say any more. Because this is why they asked me to actually take my book off the internet. So, John, you might not be aware, my book was called Forex versus Futures, The Global Deception Continues. Wasn't very popular. With the Forex brokers, it was very popular otherwise. Because one of the other books I wrote was an international bestseller. So, let's get on with it. So the trade must meet your already proven trading plan. Guys, the larger charts must show a proven ratio-based stall. Guys, so it's all about the stall in the market. It's all about the stall. Now, the larger chart trade duration to identify likely time expectations. There's an incredible example. There's an incredible example right now on the NASDAQ, which is probably going to blow your mind. So I'm going to show you that. The larger chart confirmation candle, pivot extension targets, we'll talk about that. And PS, this little one all the way down the bottom, PS. I use this strategy every day as a futures trader, guys, using the 5-minute, 15, 60-minute, 4-hour combination. Now, I also use this strategy every week as an investor into longer-term trades in other asset classes, which my primary asset class at the moment, guys, is precious metals and crypto. The reason I raise that, guys, is not only does the trading pit offer multiple trading disciplines, but the beauty of what we're covering is you can take this information, you can apply it to anywhere in the world that you want, provided you're picking the larger chart stall points. Okay, now, John, proven plan. Perfect. So, guys, again, everything I'm doing tonight, guys, is conceptual. But what I want you to do, for example, a proven plan, John, if you would ask that question, a proven plan is a static, but what we call a static bar reversal off a pivot or off a known area. Okay, now, John, if you can hold that question for me for a moment, okay, let me, guys, I built a little slide for you here. Okay, then I'm actually going to go and show you. So this is from a number of days ago, guys. This is the 4th of June. All right, so what I want to do is I want to show you a dead chart, and then I want to show you a live chart, and we'll show you the comparison between the two. So this is June 4, as this is June 4, shortly after the US market opened. It's and the ES, guys, the 30-minute chart. So really, really, really good, guys, if you want to trade the US Open, guys, looking for super long range targets. Now, what I want to do, guys, is I want to draw your attention firstly to the stair step. All right, so you see that big red arrow pointing down, little green pointing up, and the big one pointing down. What does that mean? The sellers own the stair step. What does that mean? You guys know that you're going to get either 2 steps in a stumble or 3 steps in a stumble. Now, one of the biggest hints, guys, to trading larger charts, a smaller, larger chart combination, I want you to have a look at the tiny little red candle. Now, some of you that have been to previous webinars, you know where I'm going with this, but have a look at the tiny little red candle and compare it to the candle before. Now, if we knew nothing about trading, guys, we could include, or we could conclude the following. Okay, the following is this. Can everybody see you've got a massive red candle? It means the sellers were completely in charge of the market for 30 minutes. And then we've got that tiny little red candle that's closed inside the range of that massive candle. So everybody can probably see that. What does that mean? The sellers have completely run out of steam. Right, that is a stall point in the market. Now, how did you determine the stall point? Because of the ratio between the tiny little red candle and the big red candle. Now, for those who've been in previous webinars, what is that signal called? Because John just asked the question, John, I'll ask a better question. What is the highest probability trading plan in the world? Static bar reversals. Now, Jeff's gone, Lockie, that's a ratio-based static bar reversal. It's absolutely brilliant. Absolutely brilliant. Now, Does the color matter? The color doesn't really matter, Adrian. It's all about the ratio. It's all about the ratio. Now, in saying that, guys, hear me out on this one because the question was asked before. Somebody asked me about Forex versus futures. Now, I just want to highlight a point. Guys, let's say there's 20,000 futures traders around the world all trading the S&P 500 at this time. Everybody sees the same thing at the same time. So what conclusion have every one of you drawn about what's about to occur in the market? What conclusion have you drawn? You've basically said, Lockie, looks like the sellers are running out of steam. So the buyers are about to turn and reverse. What is the daily volume on the futures market? Simon, great point. The S&P 500 turns over $3.147 trillion on an average daily basis. 3.147 trillion. So Saman, the S&P 500 alone, the S&P alone is generally bigger than the entire world's Forex trading. The whole world, the S&P 500 is normally bigger. And it's one market, not including oil, gold, all of the currency pairs, the FDAX, the FESX, the S&P, the NASDAQ, the Russell 2000, the Nifty 50. Saman, Forex, yeah, so here's the point. Forex, there's a lot of Forex people out in the world that say my market is $6 trillion a day or something along those lines. Saman, do you realize that as a Forex trader, your market is only as big as the volume provided to you by your broker? Are you aware of that? Maybe not. Now, guys, hear me out on this one if I can. Futures traders around the world, everybody sees the same thing at the same time. So what is everybody going to do if they know what they're doing? They're going to draw a conclusion about where the market is going to go. Let's go to the flip side of the coin, guys. Let's say we're Forex traders. Let's say there's 3,000 different Forex brokers globally. And those brokers are defining 3,000 different prices for the S&P all at the same time. Those 3,000 brokers, guys, who provide all of their own price data and their own prices, are you going to get the same pattern on a Forex chart that you do on an S&P chart? No, you're not. Even if you get the same pattern, the only people that can see your pattern are the people that are trading through your broker. What about the other 2,999 brokers? Well, they can give you whatever price they want because they are a market maker. That's what an OTC broker is, an over-the-counter broker. So if you're looking at this going, well, Lockie, I could do this in the Forex market. You could if you want to, but you've got to understand that your broker can trade against you. In the futures market, that cannot occur. It's mechanically impossible because we don't use brokers. Now, all of you are probably looking at this going, well, Lockie, what happens after this? Well, let's have a look. So let me click a button. Guys, so we are targeting that. Now, everybody knows what that's called. What do we end up with there, guys? We end up with a reversal bar. Now, for those of you that have been to previous sort of lectures with me, guys, that's a 4-point turning bar. Now, because everyone in the world sees that as a 4-point turning bar, which is probably the most powerful reversal signal in the world, because everyone sees the same thing at the same time because we only trade futures, is what's the market's response? There's the market's response. What does it mean? Saman, I use NinjaTrader. So I use NinjaTrader and I also use Rhythmic Trader through the trading pit, okay, which is clearly who I'm talking with tonight. So I literally just brought on Rhythmic Trader myself. So that's what I use. Yes, I use Rhythmic Trader through the trading pit, and so far it's proven to be really, really good, mate, really simple to use. Now, in saying that, guys, for those that have been to previous lectures, I bet you guys see a ratio-based static bar reversal followed by a 4-point turning bar, followed by a lovely trend back the other way. A lovely trend back the other way. What if the trade swaps, which is mostly OTC brokers, then this is even worse. Oh, mate, Jay. What, Matej? Holy moly, mate, you are talking chalk and cheese, mate. You are talking. No, mate, I wrote a book on it. I've also, as I said, I've got an international bestseller, mate. You are talking about and you're talking about bananas and mangoes. You're talking about completely different things. Now, in saying that, Matej, there's a lot of people in the world that would say to me, all forms of trading are equal. And I would say, no, they're not. I said, some people trade through brokers, other people don't trade through brokers. So we get to trade pure price movement, like the pure price of the market, because there is only one price. Now, guys, I could do a separate webinar on that for you, but we're not going to, because I've got about 9 minutes. So I've got to roll. This is, guys, this is the key to starting to look at smaller chart, larger chart, smaller chart, larger chart combination trading. The reason being is what you're doing is you're using the larger chart to pick a stall point in the market based on ratios. You're then saying, I'm going to take the market long on my 5-minute chart with acceptable risk, but I'm going to use the 30-minute chart to basically work out where my targets are. So we are using the 5-minute chart for entry, for very tight risk control and very accurate entry. And then we're using a 30-minute target to work out how far the market is likely to go. Now, interesting point, guys, interesting point. So I want you to take a mental image of that, because this, it's all, like I said, smaller, larger chart combination trading, guys, is all about ratio, like full stop. It's about ratio. Right, now, let me show you something here. So again, I'm going to bring up, so this is from the S&P 500 from the 4th of June. I'm going to bring up the NASDAQ chart. I'm going to bring up the NASDAQ chart from the start of the European Open today. What I'm going to do is I'm going to rewind back to just before the European Open, which is right there. Okay. And now the beauty of this, guys, the beauty of this is a live chart. Okay, so just to quantify that, it's a live chart. If anyone out there in the world's going, oh, Lockie, I think you're cheating, can everybody see that literally the NASDAQ, as I talk to you right now, is trading at 19094, and you'll probably see that bouncing up and down. All right, so live chart. Now, what I want you to do, guys, what I want you to do, as we did, guys, as we did here, I'm going to put a little circle over here. Okay, let me put a little circle over there. Okay, I've got my snap mode on, So we're going to put that there. And I'm going to ask you a question, guys. Even if you've never been to a webinar before, I'm going to ask you a question. The question is, what are the ratios telling you? Now, you already know. Does it matter? It is 15 minutes. John, 15 minutes is an incredible reference chart for the 5-minute chart, which I'm about to bring up for you. All right, so here's the 5-minute chart. Guys, let me bring this down for you. Okay, so here's our 5-minute chart. We were playing here before, but what I want to do is I want to come back through to the European Open, which is right here. Okay, so right there's a European Open. Now, what I want you to do, John, though, is I want you to draw some conclusions. Now, John, we already know what's the magic number? What's the magic number on the NASDAQ? Okay, what's the magic number? Now, we've already done it on another example. Okay, but let's do it here. So sellers sell the market down, the buyers buy the market back. Now we're expecting the NASDAQ to go to the 133 fib extension. Hang on a second. So Lockie, are you telling me that at the start of the European Open today, like right now, start of the European Open today, that the NASDAQ was at the 133 fib extension? Yes, I am. What does that mean? It's probably not going to go much further. Okay, so what does that mean I'm going to be doing? My preference is for buy signals, not sell signals. Why? Guys, not only has the NASDAQ got 2 steps to the downside, which is really easy to spot. All right, so, okay, let me just fix that line for you. There's step 1, there's step 2. So, we spoke about 2 steps in a stumble. But the NASDAQ's basically hit its magic number. It's effectively gone as far as it's going to go. So what else can we add there, guys? Have a look at the ratio. Let's have a look at the ratio. So compare this tiny little green candle down here to the red one before it. Would you suggest the green to the red is slightly smaller? Absolutely. What about if you compare the little green to the even bigger red, or the little green to this massive red up here? So at one point in time, the sellers were completely in control of the market. And as much as they've stayed in control, they've eventually lost control until here. So what does it ultimately mean? Guys, we are looking for a valid buy signal. So please hear that, a valid buy signal. And you're not just pushing the button. You're looking for a valid buy signal on the 5-minute chart going back the other way. Now, where are we interested in buying, guys? I'm interested in buying anything above the top of that green candle, of which the price is 0.83. Okay, 083. Now, have a look at this big green candle here and tell me what you guys see. Okay, tell me what you guys see. Now, I know this is going back into, I'm just going to try and get rid of that black line. Can you guys see that? I mean, as much as we put a Fibonacci extension on the 15-minute chart, can everybody see the 5-minute chart is failing at exactly the same point? Kay, well done. Guys, so Kay's looking at this going, Lockie, hang on a second. That candle is a 4-point turning bar long. Now, what did I say the most powerful reversal signals in the world are? 4-point turning bars. So hang on a second. The 15-minute chart says we're running out of steam, and then the 5-minute chart produces a 4-point turning bar. Interesting. Okay, Remy and a delta. Don't get me excited. Don't get me excited. So, guys, we took this. So can everybody see this little label above this candle here called static bar reversal? Okay, SBR, static bar reversal. So the indicators tell you when to trade, right? That's what we've done. So what we did is we waited for the European market to open for those traders that missed these signals over here. We waited for the European market to open. We waited for the sell down back below that static bar reversal and back below the 4-point turning bar. And then we put our entry over the top of the 4-point turning bar. Now, what does that mean, guys? What does that mean? It means that we were carrying this much risk. So for those people that are pedantic about 1-to-1 risk to reward ratios, then all you do is move your square up. And what do you find? You've got your 1-to-1 risk to reward ratio. John, how do you translate 15-minute bars to the 5-minute chart? Okay, that's my point. So mate, what we're doing is we're using the 15-minute chart as a filter to pick up high probability 5-minute chart trades that are going to go a lot further in our favor. And this, guys and girls, this may suggest that there could be such a great little lesson here. That's my time going. Got about 5 minutes, guys. So I'm going to do my best. Okay, now let's have a look. 1, 2, 3, 4, 5. Okay, this is exactly how I want you to trade the market. Okay, let me show you. This little box, guys, so that yellow box we've got there is for those people that love 1-to-1 risk to reward ratios. But can I suggest we're about to do a crap load better than that? Okay, so what we're going to do, crap load is a very technical trading term, of course. What we're going to do, guys, on our first contract, so we're going to take a two contract trade. On our first trade, we're going to pick up our valid signal, knowing our intelligence. So guys, our drone is flying above the battlefield going, I think you guys need to go long for long range targets. John, where do you start counting the 5-minute chart? Effectively, in the European pre-market. Okay, so that for me is at 3 o'clock Tokyo time. Okay, 3 o'clock Tokyo time. The gun goes at 4 o'clock Tokyo time. Mate, great question. So guys, let me get back to this because I've got to be careful I don't run out of time. So what we've got is I want you to do this. Okay, I want you to enter the trade at exactly where the algorithm tells you to enter the trade. Okay, well, that's what I want you to do. I then want you to go for a 20-tick target, which means you've earned $100 US. Okay, done, finished, in the bank, awesome. You're then going to bring your stop loss to +4, which means you can lose no money on the trade. And then what you're going to do is you're going to hold your trade for 15 minutes, which includes the candle you were filled on. Okay, so the candle you were filled on, whoops. Okay, so that is your first 5 minutes. There is your second 5 minutes, and there is your third 5 minutes. The moment you get to the top of that candle, if there is a problem up there, which there were, the evil twins were hiding there, which is the 76 Fibonacci's, because all you do is wait for this candle to close, and just push the close button, and you're done. That's your 15-minute trade. Now, why would you do that? Guys, because you've gone 100, 200, 300, you've gone $400 US. That cannot be right. Let me just double check. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It's not. You've gone 200, 10, 12, 14, 16, 18, 20, 22, 24, 26, 28, 30. So, of course, 30 times 4. You've gone 120 ticks up. Guys, you've got 120 ticks up. So what does it mean? You've got a 20-tick target, then you've got no risk, and you've gone for a 120. So you've got a 20 ticker, guys, and 120. That's a huge trade, guys. So 20 ticks is worth $100 US. 120 is worth 600. So you've made $700 on the trade. And guess what, guys? Have a look at this. If I bought my stop loss through to -1, all right, to -1, I've got 1 point or 1 ticket risk to make 120. What is the risk to reward ratio? 120 times in my favor. Now people go, bah, you can't do that. So, well, we did tonight. And when everyone says you can't do that, guys, I get kind of excited. I'm like, oh yeah, we did that tonight. So my point being, guys, so what have we done? What have we done? I'm just looking at the time. I'm going to be around 2 to 3 more minutes because I've gone a little bit over time. But it goes, in saying that, is everyone learning something? Guys, now I will be 2 to 3 minutes late, but are you getting value out of what we're doing? Guys, are you looking at this going, hang on a second. There is an incredible correlation between the 15-minute chart and this. And I just found out the NASDAQ fails at the 133 fib extension. Brilliant. Lockie, do you have a YouTube video that says, yes, I do, Mark? So if you go to YouTube, so DOURO, if you go to DOURO Day Trading on YouTube and have a look at the Ninja Trader video series that talks about multiple target trading, it's all there. It's all there. It's all free. It's all free. Oh, guys, do you want a little milestone? You want me to tell you a little milestone? A little victory. We like sharing victories. Guys, we like sharing victories. Guess what? My goal was to get more than 20,000 views on YouTube. Guess what? 20,200 views, or 21,200 views crossed through earlier this afternoon. So we've gone from 0, guys, didn't even have a YouTube channel 6 months ago, 5 months ago, didn't even have one, to now more than 20,000 views. So can I suggest we may actually be heading in the right direction, guys, because people are learning stuff that's actually really valuable. All right. So thank you for the thank yous. Now, thank you for the well dones. Now, guys, today we wanted to talk about the context of the smaller chart and the larger chart running in combination. What happens if there's another example today where this worked? I wonder if there's another example. Let's have a look. Okay. So, all right. So now we're going to get rid of all this drawing, guys. I'll do this as quickly as I can. I know the trading pit is very, very keen for me to finish on time. That orange candle there, guys, is a high volume candle. It says the sellers are running out of steam. Please get ready to buy. Please get ready to buy. Now, what time was that? 6:45 p.m. Tokyo time. Okay, 6:45 p.m. Tokyo time. Let's have a look. Bomb, 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 bomb. Oh, hang on a sec. Well, slow down, Tiger. Slow down. So it's 6:45 p.m. Tokyo time. The 15-minute chart with excess volume, this is called extreme volume, guys, or excess volume, said, I've run out of steam. I can't go any further. Awesome. Who owns the stair step on the 15-minute chart? Okay, there are the sellers, there are the buyers, there are the sellers. Sellers own the stair step and they're using too much volume. Okay. What have we picked up on the 5-minute chart? What have we picked up right there? Guys, now it's got a label on it. It tells you what it is. It's a -2 rated static bar reversal long. It's a -2 rated. So can everybody see? Some people might have seen these indicators before. That tells us that's a relatively strong reversal setting up. But mind you, the 15-minute chart has already said I've run out of steam. So I wonder how the market's going to respond. Let's have a look, right? So we go one more candle. And what have we actually got there, guys? If you look at ratios, look at the green versus the orange, and you tell me what that is. Now, what's the bet Bo's going to tell me? Lockie, that's a static bar reversal long. It's also a ratio-based static bar reversal long on the 15-minute chart. Awesome. So I wonder how that's going to feed into the 5-minute chart. Great question. Guess what we pick up? Have a look at this, guys. That's a 10, well, I call a 10x. That's a 10x rated 4-point turning bar. Hang on. Well, slow down, Lockie. So we had a 4-point turning bar long here that smashed its profit targets. Are you telling us we've got the same thing again? Yep, we do. In fact, this one was at 345 and this one's at 655. Okay, I wonder what the market did. Let's have a look. Now, interesting point. Risk to reward. I know there's someone out there going, Lockie, what was the risk on the trade? Okay. So the risk is always defined by where the enemy failed. There's your risk. Okay. There is your one-to-one risk to reward if you really need it. As if you really need it. Or we could do this. We could do this, which could be kind of good fun. We could go for our standard 20-tick reversal. Now, if you entered down here, guys, that's fine, but I'm talking the 4-point turning bar there. So what we've done instead, guys, we've gone for $100 US, which is that square, and then we've brought our risk to nothing. We've then gone to maximize the profit on the trade. Now, interesting point. I wonder where they've stalled. I wonder where they've stalled. Now, again, there'll be 2 Fibonacci's here, and this will be my last learning, guys. There'll be 1 Fibonacci that runs from there to there. So they may have run into, looks a lot like the evil twins. There's another way of working out where they're going to stall as well. We run our Fibonacci up, our signal bar, back down here, and we watch for them failing at the fib extensions. All right, now at this point in time, they've gone and smacked through the 133, stepped over the 141.4 and gone straight to the 200 extension. So what does it mean, guys? It means the traders that were long on your signal today, on that signal right there, which is algorithmically perfect. It even tells you at the bottom of the candle, this is a perfect signal. This is perfect. It doesn't get any sexier than that. It's either going to fail at a Fibonacci extension or it's going to fail at a Fibonacci retracement. So all you do is you draw your retracement from here to here, okay, and see if you've got no fib failure, guys, then it was the larger fib, which runs from there to there. Oh, look at that. So what have they done, guys? We've gone long here. So let me draw the scenario for you. Okay, we've gone long for $100 US, which is that much. Okay, so we bought the market. We've got $100 US. We then, for mathematics, guys, let's just say then we've got 1 ticket risk on the trade. So our stop loss is at -1. They've then gone 1, 2, 3, 4, 5, 6, 7. So they've gone 7 times 4. 7 is 28. They've gone 28 ticks further. They've gone 28 ticks further and they've run into a Fibonacci. Now, interesting point. How long are you holding your trade for? 15 minutes. That's interesting. What candle were you picked up on? That one. 1, 2, 3. The moment that candle closes, dump them. So guys, at that point in time, you were 48 ticks into profit. You've got 1 tick at risk. What's your risk to reward ratio? 48 times in your favor. And people think a 3 times risk to reward ratio is sexy. Guys, they literally, I'm not being rude, but they've just got to learn how to trade the market, guys, a little bit smarter than the average bear. And as you can see right now, guys and girls, that's a live chart. So I'm a little bit over time, guys, but what I would love to know from everybody, what's the #1 lesson you've learned in the webinar today? Guys, #1 lesson. I'm thinking it's probably 2 steps in a stumble or 3 steps in a stumble, or the 15-minute chart is a great reference chart for the 5-minute chart. Check the ratios. Adrian, 1440 versus the daily, very, very common mistake made around the world. So please don't make that mistake. Suzanne, reference charts, absolutely brilliant. No, guys, so I mean, so big is this reference charts issue, guys. I've actually written an entire trading course. It's not ready, it's not released yet, but I've written that, guys, for all of the DOURO traders, guys. It's called the 102 course, and it's going to take you through how to read smaller chart, larger chart in combination, guys. But this was an introduction, guys. I hope this was good fun. Oh, Mark, guys, Mark, you've nailed it, guys. So everybody, even if you're watching YouTube, guys, read the larger charts, then wait for the signal on the 5-minute chart and then go. It gives you acceptable risk. It gives you an awesome and very accurate trade entry. And clearly we've got indicators that tell you where to get in and where to get out. But again, if you're drawing those conclusions on your own bat anyway, you're in a really great place. And Adrian, you've nailed it, guys and girls. My last point, stair stepping is king, price is queen. I hope you have learnt a ton in the webinar tonight, Luca, even if you're overseas. So even if you're overseas, and to quantify that, guys, we had 6 trades on the NASDAQ today, 6 trades, 6 winners. So again, if anyone says you can't get it right 100% of the time, then tell them that you can. All right, guys, have a great night. I think I'm ending the webinar for everybody. So do have a great night wherever you are in the world. Thank you for attending. Oh no, here's the guys. Here's the big boss. Don't tell him anything.
What an amazing webinar that was, Lucky. So thank you very much for your time and everybody. And that's the time for a gin and tonic.
Absolutely, it is gin and tonic time, guys. Have a great night. I'll see you soon. Bye bye.
Bye everybody. Bye.
See you, mate. Bye.